In today's video, we're diving deep into a topic that doesn't get nearly enough attention, but absolutely should. We're talking about pensions. More specifically, how having a registered pension plan can completely transform your retirement strategy here in Canada.
And equally important, how not having one can quietly be putting your retirement at a little bit of risk. Because while most Canadians are focused on RSPs and tax-free savings accounts, the dramatic decline in pension coverage has created a crisis that many people don't really realize that they're in.
We've spent years analyzing Canadian retirement data, and the shift we've seen in pension coverage over the past 40 years has changed everything about how you should be planning for retirement. And yet, most advice hasn't caught up to this new reality.
And that's why we're making this video today, to break it all down. We'll show you how pension coverage reshapes your retirement math and what you need to do based on whether or not you actually have a pension.
Sounds great. Let's get right into it, John.
So let's start with the big picture. How has pension coverage changed in Canada over the last 4 decades? Well, for one, male pension coverage has fallen off a cliff. It dropped from over 50% in the 1980s to just 37% today.
Oh, that's not just a dip. That's a fundamental shift. And what's even more interesting, women have actually surpassed men when it comes to pension access. Female coverage rose to just over 40% and has remained fairly stable since.
The article we reviewed highlights the shift as a critical factor in modern retirement planning. It notes that women are now more likely to have pensions, but that wasn't always the case.
So why'd this happen?
Yeah.
Well, it's a mix of things. Longer life expectancy, lower market returns, and growing global competition made defined benefit plans expensive for employers. And that caused many companies to scale back or eliminate pension offerings altogether.
The industry is offering high pension coverage like manufacturing and public administration have been shrinking. Meanwhile, sectors like retail and service, which usually don't offer pensions, have grown.
So there is a pension gap we're seeing, and it isn't a temporary problem. It's baked into the structure of how our economy is now. And it's forcing a huge number of Canadians to plan for retirement without one of the most powerful tools that previous generations relied on.
So now that you understand how pension coverage has fundamentally changed in Canada, let's examine how having or not having a pension completely transforms your retirement planning requirements.
Let's be clear. Having a pension is a retirement game changer. If your employer offers a defined benefit plan, that's guaranteed income for life. Something personal savings alone can't replicate.
Yeah, and don't forget, employer contributions essentially double your retirement savings. That's money you don't have to earn, save, or invest yourself.
We've talked about it in the past. Pension coverage also eliminates what's known as the sequence of returns risk. That's the danger of retiring into a market downturn. Pension income smooths out that risk entirely.
It also is going to reduce the amount you personally need to save. Many pension holders can save less aggressively and still retire securely.
And because your pension provides you with a guaranteed source of income, you can take more risk with your personal investments, potentially increasing your long-term returns.
And plus, there's going to be some tax planning opportunities. With predictable pension income, you can structure your withdrawals more efficiently, especially when layering in with Canada Pension Plan and old age security.
Women in particular have benefited from a shift in higher pension careers. The article notes a rise in women holding roles in management, natural sciences, and accounting, fields that often include these pensions.
That kind of occupational shift has given many Canadian women better retirement security than their male counterparts, something that was unthinkable just even a few decades ago.
Now that you understand how pension coverage creates massive retirement advantages, click the link in the description to watch our short training video where we'll show you exactly how to optimize your retirement strategy based on whether you have pension coverage or not.
Now, for the other side of the coin, what if you don't have pension coverage? You're facing a much steeper uphill climb now.
The decline in male pension coverage has created a retirement crisis that few people are talking about. Self-directed savings are expected to replace employer pensions, but most people simply don't save enough.
Yeah, and especially now without employer contributions, you have to come up with all the retirement funding yourself. That means saving more, investing more, and potentially even taking on more risks to do so.
And you may also face longevity risk, outliving your savings or your investments.
Yeah.
And that's without the safety net of a guaranteed income stream. That's a pretty scary thought for anyone planning to retire in the next couple of decades.
Yeah, many of the industries that dominate today, like retail and hospitality, offer little to no pension coverage. And that's a massive structural disadvantage for workers in those fields.
In addition to that, we've seen unionization decline across the board, and that reduces the bargaining power employees used to have for securing pensions. It's a double hit: fewer pensions offered and less leverage to negotiate for them.
If you're in this situation, you need a compensation strategy. Higher personal savings rates, more aggressive investing, and strategic withdrawal planning all become essential.
Now that you understand these critical pension coverage implications, let's look at how you can implement this advice directly into your retirement plan.
So how do you build a retirement plan that accounts for your pension status, whether you have one or not? Well, let's start with those who do have pensions.
So, if your income in retirement is partially guaranteed, you don't need to max out savings just for peace of mind. Instead, focus on a smart investment mix that complements, not duplicates, your pension.
And pay attention to your years of service. The longer you stay, the bigger your pension benefits, so career timing is going to matter.
Now, for those without pensions, the strategy changes dramatically. You need to save significantly more and potentially use products that simulate pension income like annuities or income funds.
It's also crucial to review your career trajectory. Are there opportunities to move into roles or industries with better pension benefits? That could be a game-changing decision for you.
Now, you have to start planning early. The earlier you know your pension status and can adapt accordingly, the more flexibility and security you'll have later on.
Now that you understand how pension coverage completely transforms retirement planning in Canada and why the dramatic changes in coverage create different requirements for men and women, you can implement a strategy that's optimized for your specific situation.
And if you want personalized guidance on how to optimize your retirement based on your pension status, click the link in the description to watch our short training video. We'll walk you through the exact steps you can take to secure your future no matter where you're starting from. We'll see you in the next video.